Alright, what's going on guys? Welcome back to the channel. So it's the beginning of a new month, and that means it's time to look back at the previous 30 days and see how the performance of my portfolio was. Now this has been a pretty rough month for all of us, and I'm going to give you guys some updated opinions on my various holdings, as well as showing all of the income I generated. So over the past 1 month, the S&P 500 went down an additional 10%, and if we zoom out over the past 1 year, we can see that we're actually down 1.82%. Now I think a lot of us understand that this poses a fantastic discounted buying opportunity. And in one of my recent videos, I discussed how you can use the VIX as a good indicator for discounted opportunities in the market. And historically, if you buy in when the VIX is over 33, that gives you alpha over the market. And if I come back to my portfolio, that's exactly why I have $1,000 sitting right here, about to be invested at the 3 p.m. trading window, and that's going to go straight into VOO and XYLD pretty much evenly. Okay, so filtering by the past 1 month, let's begin with my income assets. So we can see that both of these, Divo and JEPI, are in the green, although Divo is holding up a little bit better, down only 4.5% versus 5.5%. This is the price action for Divo over the past 1 year, and we can see it's essentially flat. And JEPI in comparison is down 2.5%. And taking a look at the dividend, Divo has a yield of just under 5%, and the most recent dividend payment was 14 cents per share. JEPI in comparison has a very massive dividend at the current moment, over 12%, and their latest dividend was absolutely massive, the largest on record. But unfortunately, JEPI is the last ETF I have to pay out, and thus they haven't given the payment for April yet. But it's pretty easy to guesstimate what the payout is going to be, because JEPI, much like other covered call funds, use volatility to their advantage. So when the volatility level is high in the market, the income level of these assets is also high. And we can see in the beginning half of April, the volatility was somewhat low, 25 is still above average, but later on in the month, the volatility really spiked. So coming back to the dividend payments, I don't think it's going to be quite as high as the March payout, but it's going to be pretty substantial, maybe around 50 cents per share. And if you take a look at the actual dividend payment I received from Divo this month, it's $24.48. Now, to give you guys my updated thoughts on these two investments, it seems like that currently in the investing community, JEPI is becoming more popular. And if I had to guess, I'm pretty sure the reason for this is because of the massive dividend that as of lately has been increasing pretty substantially. And when it comes to Divo, their dividend payment does seem to be pretty stagnant over the past 2 years. But since the inception of JEPI, which is the younger of the two funds, it has an annual return, a total return of 19.27, and Divo on the other hand has an annual return in that same time period of just over 21%. So I'm still a fan of both of these two ETFs. I think they're both very high quality. I plan on collecting dividend income for many years to come, and during all of this recent volatility, they have been performing a lot better than a lot of other assets on the market. Now, my next major source of income is BST, which is a BlackRock Science and Technology Trust. So this is a closed-end fund, and it focuses on growth and tech names, which of course have been getting slaughtered, and over the past 1 year, down 31.68%. They currently have a dividend yield of around 8%, and because it's a closed-end fund, the distributions are managed, and currently they're 25 cents per share. So when it comes to BST, of course, the performance is very poor right now. But I personally believe that the holdings in this closed-end fund are very high quality, and long-term, I think they're going to do just fine. So considering how much it traded down, as well as the fact that it's trading at a discount to its NAV, I'm still a big fan of BST. The only thing I'm going to keep an eye out for is the monthly dividend. I want to make sure that they do not cut this anytime soon, because that would be a red flag in my opinion. But so far, there's no indication of that happening, and they just recently paid out a special massive dividend payment. And we can see that they do like to increase their dividend every couple of months. So I'm going to be keeping an eye on this figure and seeing what happens to it. And in terms of my dividend payment from BST, it's the same as the previous month at $29.60. And then finally, when it comes to my income assets, that leaves us with XYLD. Over the past 1 year, they are down 3.38%, but due to the way this ETF generates its cash, these past couple of months with all the volatility have been the best ever for the dividend. We can see it's currently paying out about 50 cents per share, which is well above the average historically. And that results in a current dividend yield of 12.74%. And that's why if you look at the total return of XYLD since its inception date, so this is reinvesting that dividend, it has an annual return of 12.18%. Now, XYLD is not a growth play by any means, it's purely income, and that's why I split my investment between that and the S&P 500 itself. This way I get exposure to income as well as the growth of the US stock market. And this 50-50 split is actually represented by XYLG, and here since the inception date, it has an annual return of 15.83%. So this strategy is very basic, but I'm a huge fan of it, and I love the way it acts as a hedge during times of high market volatility. And that's exactly why I'm taking advantage of the dip, and I'm currently buying $1,000 more of this investment. And if you guys follow the channel, you know that I also have a crypto portfolio. I keep it on BlockFi, I generate interest, and they paid me a monthly interest payment of about $80. So if you combine that with my dividend payments, including the estimation of what Jeppy's going to pay, that gives me a total monthly passive income of $210 for the month of April. And comparing that to previous months, that's my second highest payment ever. I also keep track of my net worth over here, and this month it did take a pretty big nosedive along with the rest of the market. So that's the latest updates with my portfolio, my outlook on these investments, and what I'm currently buying. Now, I want to finish by saying buying into the market when it's taking a nosedive like this is very difficult to do, and there's no guarantee that this is going to stop anytime soon. But historically speaking, if you can buy when it's difficult, go against the grain, that has historically led to better returns. And having a VIX over 33, for me, is just way too tempting not to buy, and that's why I have another $1,000 going to work today. That's gonna be it for the video. Hope you guys enjoyed. If you did and you're still watching, I appreciate a like on the video. Go ahead and subscribe, and I'll see you guys in the next one.